of June 2015. It's 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. As always, any questions, issues, glossary, information about any of the comments that I'm making here, go to futurestrader71.com /contact, shoot me a note, or go to resources to look at old videos or the glossary, just so you have that as a point of reference. A quick rundown of the news, very muted night. A final reminder that today is in fact rollover day, and I understand that many will argue that the volume has not transferred to September, it's still in December, and so on and so forth. The official rollover is the start of the session today, which means from 5 p.m. Central yesterday going forward, the front month is September on the electronic. That's when a session starts. And the pit S&P session starts at 8:30, and so it moves to September at 8:30 Central. I go to the official, I roll with the official roll, even though I am volume based, because it doesn't matter. Just for today, there will be anomalies in the volume, but generally there's an acceleration on the open of volume coming into September versus December. The book is thick enough to trade the September contract, and it just doesn't make any sense to continue to trade December when September is the front month. Others are more comfortable changing tomorrow, but I am quoting September going forward, so my charts are going to look off to you because of the premium difference and because they've all been adjusted to September. Okay? And if you're on IRT, Investor RT, or Market Delta charts, or Sierra or whatever, you need to make sure you do a full download so that you're not getting September quotes today and imposing them on historic quotes based on the June contract. So you need to refresh everything so you can get equalized contracts and get proper data, since our composites are based on historic data. Okay. Moving on to the news, EU officials continue to suggest next week's deadline. Next week is going to be the deadline for Greece. China's May data points generally in line. Copper declines. This morning, at about a half hour ago, we got the U.S. numbers. May advanced retail sales came in at 1.2 in line, and retail sales ex autos were stronger at 1% versus 0.8. Initial jobless claims came in at 279,000 versus 275,000, so slightly worse. Continuing claims 2.27 million versus 2.19 million, also slightly worse. May import price index 1.3% versus 0.8, better or higher, and year on year negative 9.6 versus negative 10%. Just a few moments ago, for those who trade crude, Saudi's Aramco official says that they're ready to boost production in coming months to record highs to match any demands, talking to prospective Indian buyers for additional supplies. And then speaking of crude, the U.S. dollar has curtailed its 3-day drop now. And we're seeing that in the price of crude weakening, since crude is priced in dollars. Those generally move inversely. Looking ahead, at 9 o'clock Central today, we get U.S. business inventories at 0.2%. EI natural gas is due at 9:30. We're expecting 113 billion week on week. And then there's a minor number at 11 o'clock called the U.S. household change in net worth. And overall, that's pretty much what we have for today. Speakers, we have a summit in Brussels right now with the EU, so comments might come through every once in a while. It's important to have a news feed for this stuff. ECB's Lautenschlager is expected to speak at 8:30. And then at 9:15, Germany's Bundesbank board meets. to speak about the monetary union. There's a 30-year bond auction for $13 billion at noon today for those who are trading the curve or are looking at treasuries. Might want to pay attention to that. Let's switch gears and look at what we have for a technical picture. Currently, the September contract is trading at 2101.50, 2101 quarter. Yesterday, the expectation yesterday was for a rally, which we got, but the expectation was for responsive selling on the open. Now, overall, yesterday we expected it to get to 2101.50 in the March contract. So that's about 2094 or so. That's the high volume node here. So this is 2093.75 right here. This high volume node was the target yesterday. It's the equivalent of 2101.50. But the ideal situation, the hypo one situation, was for a push to there with 2112 in the June, which is now 2105 or so in the so it's 2104.50 in the September contract. So overall, we got what we wanted on hypo 1, but the better situation would have been for responsive buying to close this gap and push into the prior day's range. I was looking for it to test 83 and a quarter, 83 and a quarter down to 80 or so, which is about 72. 72 and a half or 72.25 right here. It would have created a much better base to have responsive buying before selling before the buying came in, before the initiative buying came in, to hit our targets as mentioned at 2094 in September and 2104 in the September contract. Instead, it had a very, very small open auction out of range, pretty tight, and then it just went through the opening swing high, pulled back right to the opening swing high twice, and then it continued higher. The opening swing high in the September's 2081.75, and it just continued higher and hit pretty much every target except for the 2104.50. Where do we get the 2104.50 in a September contract? That is the next balance zone up above there, 2119, which used to be 2127. And so we ended up having a rush up. A lot of this was driven by news out of Germany saying that they're willing to reconcile with Greece and allow for a partial reconciliation to release some aid. And what that showed, and the reason we got a pretty good pop on that, is because it is showing that it is evidence that that pretty much everybody wants Greece to remain in the European Union. So the expectation is that this is an indication that Germany is willing to bend a little bit, and it pushed us through. Since then, we went sideways. Tough trade in here. I took a couple of stabs at some trades in here, but didn't really get anywhere. Tough trading on the sideways. It did leave us with what looked like a weak high on a P-shaped profile. Very weak structure below. So let's look at that on a market profile chart. Oops. On a market profile chart, which will show us a little bit more clearly what we've got. So on a market profile chart, we have basically a flagpole here. And so the idea is that the caution here is that if we do fall below this 94.50, be careful. Next target becomes 92 and a quarter, and then if it cannot hold 92 and a quarter, next target becomes a singles at 2088.75, and so on and so forth. This is not a properly auctioned area. It moved through here very quickly, and that's why you have that thin profile below. So as you're as this is setting up to be bullish, it seems to have gotten a little bit ahead of itself. Like I said, it would have been better for the market to push lower and then zigzag its way up with an upward skew towards our targets as mentioned, the 2093, 94 area and so on. It didn't do that. It went too quickly. And so we have what looks like an incomplete auction below. And because we have an incomplete auction below, we end up with areas beneath us that are likely to be tested and broken lower. So with this being the way it is, we had a weak high. We had the point of control at the far end of the range. This is a trend day, classic trend day. We expect that the market will continue higher overnight, and it did. The high is 2102.75. The overnight high is 2102.75 with it holding against the high. So we're looking at a continuation higher into today's session, but I expect it to have responsive buying. There's a very pronounced consensus of price here at 2097 quarter in September. Again, I'm quoting September prices only, and this area is likely to be tested. There's a lot going on in this area. I expect it to be tested, so I'm looking for some responsive selling before it turns back up and then reaches that key target mentioned yesterday of 2104.50 in the September contract, which is 2112 and a quarter in the June contract. Okay, so that's the primary hypothesis. Otherwise, if it does not hold on to this area as it tests lower, if it tests lower, then be careful. This is where I send out a caution shorts below 94.75. I would say caution shorts or caution longs, because this is likely to drive down the line into the singles below. As mentioned, the first singles are at 92 and a quarter, the second set of singles at 88.75, and those would be the targets in that situation. Okay, I'm going to actually cut this one very, very short. I need to do more prep because of the rollover, so I'll leave you with that. If you have, as I said, if you have any questions or comments or anything, please reach out to me at futuretrader71.com/contact. Otherwise, good luck today, and I'll catch you tomorrow. And by the way, tomorrow we have an open AAQ webinar. I'll post a link for that. Anybody can join. This is an Ask Me Anything kind of a session where I try to address the most common things that I'm seeing and answer questions as much as possible. I'll catch you tomorrow.